Good evening and welcome. I'm Sarah Snyder. I'm your conference treasurer. And welcome to our webinar on the Payroll Protection Program, Loan Application Forgiveness. We're glad that you can join us. There are about 73 people that signed up for this tonight, so we'll see them as they get added on. It sounds like it's a very interesting topic. We had 77 churches that we are aware of that received PPP loans, and I know that we worked with many of you on getting those. We also have some that have now found out that there's more money available, and so they have started the loan application process in this second round, or in this continuing round, I should say. You can't come back for a second one, but for those who didn't get one the first time, they can apply for it now. I'd like to start doing monthly educational programs like this. There seems to be an interest from financial people in the congregations. And so the first one will probably be on the charge conference forms and how to fill them out, how to get into the system. That will probably be in August. I'll do one on apportionments and how they're calculated and how we budget for them. One on statistical reporting in January with our statistician, so we can go over how to fill it out and why it's so important that you get the numbers right. And then I've also had the question to do some on just basic internal controls, especially now with COVID. How do you keep that? How do you make deposits? What do you do? So the PPP program happened very quickly, as you know, when the legislation was passed, and the rules keep changing. They're certainly not very consistent. Wegner CPAs is our CPA firm, which does the conference audit, and they specialize in nonprofits and religious organizations. So they have been doing some training in this over the past several months. I've watched several different webinars from Wegner and from other companies, and I think that Melody and other people at Wegner do a really nice job of making it very understandable and user-friendly. So that's why I've asked her to be here tonight. She is the Training and Career Development Manager for Wegner. If you have any questions as she goes along tonight, please type them in the chat box, and I'll be keeping an eye on that and making sure that we cover that, or I'll know that it's coming up in the presentation because we've worked on what she's going to talk about. But I want to make sure that we cover everything that you have in the hour that we're together. I also want to say thank you to those who sent some questions in advance, because Melody and I were able to talk those over and make sure that she's included that information. So Melody, go right ahead.
Thank you so much. Thank you for inviting me. It's a pleasure to be with you, and I really appreciate this opportunity. I have a background as both a public auditor and a CPA, as well as education. So being able to share knowledge is right in my sweet spot, and I absolutely love it. And this is a great opportunity to be able to work with you. Paycheck Protection Program has been a gift and a bit of a nightmare, maybe too strong, but it's definitely been a challenge. And we're going to try and get through that tonight, and I do welcome questions at any point. Just a couple of general things to say from the get-go is that the information does continue to be clarified and subject to change. So I don't feel quite as strongly as I did early on that this information is only good as of this minute. I do think a little bit longer shelf life, but all that to say that it is still subject to change, and we are still waiting for some further guidance that's been promised by SBA and the Treasury. So just being aware of that. And that obviously I'm not a lawyer, this is not legal advice. And even as we talked through some of your questions yesterday, every situation is different, so it's hard to offer one answer that fits everybody's question. So I'm happy to answer individual ones and give you, the high level information, but just be aware that there may be other specifics that are not easily answered in this kind of format. Just as a way of getting you kind of familiar with what's going on, there was a deadline to apply for PPP that was June 30th originally. And literally at the last possible moment, practically within 2 hours of the deadline, is when they actually started the process to extend the deadline. So the deadline has now been applied to apply through August 8th. And there is funds that remain. And at the end of this presentation, I've added a slide we are doing, Wegner's doing a free webinar tomorrow for those who've never applied. So I'm not going to go into application tonight. We're talking about forgiveness. And then there's some information there about the size of the program to date. And as people may not have been aware when they originally applied, the information was subject to public disclosure, and it has been released on the SBA website. Details for loans less than 150 are more by region. The details for those over loans of 150 are still pretty high level. It's, you know, location, name, amount of the loan. So nothing really that isn't subject to open disclosure kind of information is disclosed there. One of the big things I want to say up front is what was the intent of this law and kind of where we're at. It has happened so quickly, and for those of you who deal in taxes or anything with laws, it usually is a much slower process. So for them to get this issued and guidelines out there this quickly, there were bound to be things that were unclear and needed clarification or disagreed. There were things that disagreed in their own documents. That's to be expected when you put something together this fast. That initial panic, though, over getting the funds and feeling like we need better information, I just want to say, I think that has passed because of some of the things that have happened that we're going to talk about. And first and foremost, I recommend just taking a deep breath, because there's plenty of time at this point to apply for the forgiveness and ask the questions. And for those who didn't have funding, there's still time, obviously, to apply for it. It doesn't have that pressure of time sensitiveness that there was when we initially started the whole PPP process. So that's the good news, just being able to take a deep breath and be able to talk about and look through a few things. So essentially what happened was the PPP was obviously enacted with the CARES Act, and then there was additional funding. And then the Flexibility Act changed things. So this has been through several iterations in its short life. And this slide summarizes what was in the original act versus what's now the act, with the changes passed on June 5th with the Flexibility Act. So originally, there wasn't really a due date for when you had to apply or information on that, but now with the act, it's very clear that you can only use the funds through December 31st. There were a lot of questions up front. Well, what if I got my loan late in the game? Do I have to use it by June 30th? That's all a moot point now, because you have till December 31st and there aren't any issues with having adequate time to use the funding. The forgiveness period, also known as the covered period, is essentially what you intend to use the forgivable expenses, the period that you intend to use for those forgivable expenses. Now, this subject area right here that I will tell you right now is not clarified. And I will explain that further here in a second. But there is some confusion over this, and the highest levels recognize that, the SBA recognizes it, and it's part of the reason the bank is not yet, or banks are not yet accepting forgiveness applications, because there needs to be some clarification. So the original law covered 8 weeks. That wasn't adequate, and it really didn't meet the intended purpose of meeting the needs of small businesses and nonprofits and churches. And there was also a flaw in how you applied for the money versus what was forgivable. It automatically set it up that it was going to be really hard, if not impossible, to fully use all of the expenses that were given as funding in that 8-week period. So what happened over time was they extended that forgiveness period to 24 weeks. And they realized that the quarantine and stay-at-home orders were not necessarily a short-term thing. Longer time frame made sense, and so they extended this. Now the big question here that comes in is, well, does it have to be 8 or 24 weeks? What about something in between? Here's where the guidance is not yet clear. The form says 8 or 24 weeks. The banks right now are going with 8 or 24 weeks because that's all they have in terms of information on their pieces. But yet SBA and some of the other guidance clearly states that you can apply before your 24 weeks are up. So let's say that a lot of organizations are going to be able to use their funds by week 10 or week 12. You should be able to apply at that point for forgiveness. Right now, though, that is not defined real well. And like I said, the banks have not yet, most of them, actually I haven't seen any. If somebody's seen a bank that has opened their portals for forgiveness, let me know. But we just got messages yesterday that says they're still waiting on the SBA too. So they haven't opened up for accepting that forgiveness application. So the intent is that you should be able to use more than 8 weeks and not have to wait to 24, but take a deep breath. Again, you're not gonna be able to do it right away. Bank's not ready, and we're gonna get there. But you should be able to use some period in between. In the past, believe it or not, the original act didn't have a deadline for forgiveness application. This one does for 10 months. Now, theoretically, you have to use the funds by December 31st. If you elect the longer time frame, 24 weeks, it's still going to end before December 31st for most organizations. If you apply then the 10 months for forgiveness, you have into 2021 to apply for the forgiveness. And here's where that sense of panic and urgency has subsided, because there's definitely some time here to take our time and get it right and do the pieces that need to be done. The other thing that was initially in the law was 75% of the funds had to be used for payroll. And that was an interesting thing in and of itself, because the actual law did not have a percentage in it. It was something that was tacked on by the guidance and the regulations around implementation, that they thought the funds were going to be so heavily taxed, and they wanted the intent of the law was to restore or retain employment. So they added that 75% payroll requirement. In the Flexibility Act, they came back and said, okay, you know, maybe that was too harsh. So they've modified that to be a 60%. The other thing that was questionable at one point was with that 60%, if I don't hit 60%, am I not going to be eligible for any forgiveness? That's not true. It's prorated. But here again, rather than getting too caught up in these ratios or making sure that, you know, 60% is payroll, what I recommend is, if at all possible, go for 100% payroll. You're going to limit your time in accumulating information. You're clearly following the intent of this whole act. And you've just lightened up a lot of questions and potential hassles regarding using that funding. Because a lot of questions came up in what is that other non-payroll when we were at the 75% limit and trying to get it all crammed in 8 weeks. That kind of urgency again and specific nature of what I have to do is not as relevant now that I have a longer window and more flexibility. Penalties is one way I've heard this. I've also heard it as reductions in forgiveness. It's a hard thing to label, because a lot of people have seen this as a grant or income right off the bat. Well, technically it is a loan. And as a loan, there isn't additional penalties in terms of additional costs. So the penalty feature is that it is a loan if you don't meet the forgiveness requirements. So there's a lot of language here that is really essential, that has to be clear, that yes, it's a loan, but we think that now with the extended time period and the regulations and all of the things that it's intended to do and why we got the funds in the first place, it really is going to become a grant. It's not a loan in the long term. But then how do I maximize that grant amount? This is where you still do have to spend some time and make sure that you're looking at the applicable pieces, because you can lose portions of the forgiveness. And it's especially related, obviously, to the levels of employment and salary. And we'll talk more about that as we go through as well. But that's the important piece here, is that you're retaining employees, and the intent is to keep people employed and businesses and churches and nonprofits going. So that's the whole intent. The original loan term was 2 years. Under the new Flexibility Act, it's 5 years. Again, for a lot of you, this is a moot point because it probably won't go to loan terms. You're going to have it fully forgiven. But just be aware, if you do want it to go to the loan term, if you received your funds before June 5th, when the Flexibility Act was signed, you are still under 2 years. That didn't automatically get replaced. But you can negotiate with your lender for the 5-year term. If you apply after June 5th, it's automatically 5 years. And this last one is those, as an accountant and a CPA, I really want to leave off this chart. But in terms of wanting to be forthright and authentic and full disclosure, it needs to be here. But I want to emphasize that this is not one I recommend. And if you're going to use this one, you may already be going down the rabbit hole of not being able to recover from circumstances. This last one is the ability to defer payroll tax payments if cash flow is so strapped that you can't make that. But there are so many consequences to payroll not being paid and things that happen when we start messing around with payroll tax deposits that I do not recommend this. If you are in this circumstance, it's probably wise to get counsel and to talk to myself or other people who can help you look at the cash flow situation without resorting to this particular alternative, because I don't think it's in your best interest to take advantage of this one. Now, with this, it is important to have the employment. That's the whole point. But again, with the Flexibility Act, they realized that nothing has gone quite as quickly as any of us maybe hoped for in terms of stay at home or back to what we would call normal, if there is such a thing, or pre-COVID, however you want to define it. So they've come up with some additional ways to allow you flexibility in restoring employment and not losing any piece of forgiveness. And a couple of these are safe harbors, and a couple of these we'll look at on the next slide that aren't termed safe harbors, but they're exceptions. So the big thing that it looked at originally was trying to restore full employment. February 15th is when the original orders went out, and kind of the demarcation in the sand as to when we start looking at pre-COVID, post-COVID kind of numbers and situations in terms of employment. So the goal has been to get back to that February 15th or earlier benchmark in terms of employment. Originally, that good faith had to be restored by June 30th. And as we saw with Memorial Day and 4th of July and summer, there's been peaks and valleys, and it has not necessarily been a straight line. So under the Flexibility Act, it is now extended through December 31st. They also added the second piece where if things don't go according to plan, and you're, especially for instance in a hospitality business, where you can't restore operations because of direct orders from a Health and Human Service agency or the Center for Disease Control or OSHA, then you have another safe harbor, because you've done your due diligence, you've acted in good faith, but the conditions are such that you cannot restore operations to the pre-COVID standards. So therefore, this safe harbor is in place. It'll be interesting to see how it impacts, churches and how churches intend to potentially use that. My daughter works for a local church, and obviously they have not been meeting in person, but they've had no changes to staffing and really work level. So it kind of depends on individual churches and circumstances and how they can pivot to potentially non-traditional ways of doing things or not. But that one is a possibility there. The other safe harbor is if you reduced your employee levels in the period starting again with that February 15th and ending April 26th, but then restored them by the end of the year, it's fine. So where it was used to be June 30th to restore FTE levels, that June 30th date is completely gone. That's not even applicable for any safe harbors anymore. It's now December. Here is a little bit of a question on if my covered period ends earlier, if I apply, you know, at week 12, or my 24 weeks doesn't even take me to December 31st, what does it mean by not later than? So that part B there is not completely defined in the guidance, but it's taken so far to mean that when you are applying for your forgiveness, if you've restored your employees to their pre-February 15th level of FTE, then you have this safe harbor. You do not need to adjust or potentially lose forgiveness because of full-time equivalents. These are the exceptions. So those first two are titled safe harbors, but then there's also exceptions. As we started diving into this, a lot of companies said, well, wait a minute, I've done my best to restore employment, but this person doesn't want to come back, or I can't retire, or they left for retirement, or they were fired. That was not the intent of the law. Again, the intent was that we weren't furloughing or letting people go because of COVID. So what these FTE reduction exceptions say is if these apply, you do not have to treat that position or that person as a reduction because it wasn't something that you did in terms of employment and COVID related. It was a normal part of business. Now, the key here, and I can't say this enough, is documentation, documentation, documentation. If you have these exceptions, you do not have to submit anything verifying them with your application for forgiveness, but you do need to have it documented because if there's questions, you have to have those records to support this for 6 years. And we're talking internally as a firm how that's even going to change some of our tax filing procedures because that's a longer open window for the agencies to actually go back and look at some documentation. So just be aware that while it's not as cumbersome potentially what you have to file with the bank, you do need to retain documentation to support it for the longer term. And again, not to panic. It's like anything else. Nothing is ever 100%. And even when you file your personal return, you don't anticipate getting audited, but sometimes it happens. Same thing is true here. I don't know that a lot of these are going to get reviewed in great detail or be audited by the SBA, but you don't know that. And so your due diligence is to make sure the documentation is there and that you've done the pieces that you need to do in preparation for that. So if you've made a good faith offer, document it, put it in writing. If you make an offer to restore a reduction in hours or salary and they don't want to come back or they reject the offer, again, make sure it's documented. Then we said the things that are beyond employers kind of responsibility, if they voluntarily resign or they choose not to work the same hours or retirement was planned, those are things beyond employers' control. And those are considered exceptions as well that do not have to be counted as a reduction. So what do we do to apply for forgiveness? Well, you're going to go through the bank where you got the loan, and like the application process, the bank may tweak some of the specifics that the SBA has in their application because the bank is still responsible for getting the funding through the SBA. And so they're going to cover themselves to make sure that they're comfortable having done their due diligence. So the bank has the right to adjust or ask for some additional information. Just be aware of that. This is in general terms what's out there with the SBA, but individual banks may tweak or add a few additional requirements. With the Flexibility Act, there's 2 forms now for forgiveness. The form that was out there before, the standard form, but there's also now an easy form. And for all of us who are not tax people or law people, we love it when we see easy because it makes our life that much easier. And just so you know, this is not my normal area of practice. I prefer consulting and accounting and helping management and making the most of an organization. I usually leave tax and law issues to another segment of the firm. But you never know where you're going to be called to serve. And this was my opportunity to serve, so braced it and going forward with it. But I'm still an advocate of easy forms for sure. To file that easy form, you have to meet one of 3 criteria. Now, the first 2 here, or the first one here, is not going to apply to churches because we're not talking about ownership. So then we look to the second and third criteria of whether or not we can use the easy form. The middle one there is that there's no salary or hourly wage reductions that are more than 25% and no reductions in FTEs. This is the picture perfect you're going to have to be able to fly through the process if you fit in this middle one. Okay. One that a lot of people have stumbled over, they haven't changed overall salary or hourly wages. It's that FTE piece. And here's where we come back to the safe harbors and the exceptions, because potentially then we don't have to worry about having a reduction if we meet those safe harbors or those exceptions. That's the whole point here. So let's say I had somebody who retired and another person who was fired for cause. I don't have to count those as reductions and I can still file the easy form. That's the point here. The last one is that I can't restore the FTEs, but I go back to that safe harbor equivalent, that I've been unable to operate at the same level of activity based on orders from those agencies that we listed earlier. So we're not talking about, you know, some local mayor that says I can't do this. You know, it's got to be a little higher than that in terms of like a Department of Health or CDC, etc. But there's a law or a order, a health order, that creates an environment where you cannot operate. That's where you can then still file. So the goal here would be a lot of you should be able to file the easy form without having to go through the stress of the full form with Schedule A and the Schedule A worksheet. Just a quick snapshot or screenshot of the 2 forms, the starting piece. You'll see the starting parts look pretty similar. There's very little difference here. It's general information. What you'll notice though on the easy form is it says employees at time of loan application and at time of forgiveness application. The reason we included that here is to re-emphasize, this gets confusing. We talk about FTEs throughout. This is the exception to FTEs. Here they want just straight head count. Okay, the head count that you had at the time that you applied and the head count that you have at the time you're applying for forgiveness application. This is not about the FTE piece. So when can you apply? As we've talked about, part of that is obviously contingent on the bank and the bank availability for accepting the forms. But with that, if once it's available, what else is applicable? Well, you have to have used your funds, ideally. Now, you can still elect to use an 8-week period and potentially not use all your funds. I would love to have that discussion though, if you're opting for that, to make sure and talk through the rationale and the reasons behind that, because for the most part, that doesn't make sense. You're gonna want to maximize the forgiveness and accept the longer time frame. You don't have wage reductions greater than 25% during the period that you're applying for forgiveness. And you maintain that 60% payroll versus other. And like I said, we're gonna make it easy and hopefully go for 100% payroll and not even have to worry about it. And I'm looking at this and I think there's a typo on the slide. Sorry, I paused here for a second because that last one I think reads incorrectly. But if we can have the safe harbor in regards to the FTEs that we talked about.
Melody, I had one question.
Sure.
I had one question, and she said that they kept everyone on staff through June as they were, but now they're looking to stop paying their nursery staff since they've not been meeting and reducing the time on the music director. And she said, are we okay since we followed through to the end of June? But you're saying that June is only if you also spent your money by June, correct? So if you're going further than that, then you have to keep people hired longer than that?
Correct, correct. Without further definition here, like I said, this is not official guidance, but let's say that you had to go through July 7th to use all your funds, then theoretically treat July 7th as the end of your recovery period, and you'd have to have full employment through that.
One other question was that somebody said that they received an email from their bank saying that Congress was considering a threshold for forgiveness, that if it passed, businesses that got 150,000 or less would qualify for automatic forgiveness. Have you seen anything about that?
No, that would be awesome news if that's true. It would lighten the load for banks and everybody.
Yeah, Shirley.
Not aware of that one, sorry.
Shirley, can you send me, let me know what bank that was?
Sure, it's Bank First out of Manitowoc.
Okay.
And yeah, they said, so that significantly simplifies the loan forgiveness process. And so they're waiting to hear instead of opening up their portal and allowing to take the applications. And that was today.
That was just today. Okay.
I talked to First Federal yesterday on behalf of ZOW, and they said the same thing. And they said, don't fill out the application yet, that it passed one and it's waiting for the other.
Awesome. I apologize. I'm not up to date on that, but that's okay.
We haven't heard anything from First Business Bank. That's who the conference has. Their last communication to us was probably about 2 weeks ago, where they said they were not able to accept applications, so just wait and don't worry about it yet. So it is possible that what we're teaching you tonight may get changed again. And I would say almost all of our churches, there were some that were over 150, but for most of you, you got less than 150,000.
Yeah, and if that does pass and the banks are able to accept that, that just changed everything for you. The big thing that we've talked about all along here is not panicking, because the intent of the law was employment, and you've all done your best in keeping employment and doing integrity and the intent of the law. And that's all you can do. So the rest of it is stuff that, you know, will come as time passes, and we'll take care of the logistics, but you followed what was intended to date. So that's the good news. As we talked about, extension of the period obviously gives us more time to utilize those funds, and it can also delay that first payment. Now, I don't like going into necessarily the loan specifics, because I don't think any of you potentially are intending to use the loan piece of it. But it is, and I think that was one of the reasons for the initial rush of trying to get the funding, was people said, okay, even if the math formulas are flawed by having us apply for 2.5 times monthly times average of payroll, but only being able to apply for forgiveness for 8 weeks, there's a flaw in connection there. I don't care. I mean, I need these funds because it's going to help cash flow, and where else can I get 1% funding? So that loan piece was attractive and created a lot of the stir up front and the frenzy for getting applications in. But again, I think that's subsided, because now with the flexibility, the forgiveness should happen and there shouldn't be too many loans out there. But again, worst case scenario, if you do have a small piece that's a loan, it's 1%. It's not a big deal. And if, even with the extended period, if for some reason there's no way you're going to be able to use all your funds, prepayment can happen any time without penalty as well. So I think you have a lot more options than a lot of people felt like initially. Documentation, like I said a little while ago, is key. What's here is what has to go in with the application. Now, with the exception of what we just heard about potentially for loans less than 150. But this is what would normally be submitted to the bank with the application. And then on the right-hand side is that documentation that you must keep. And like I said, there's a 6-year window for that has to be retained. Now, with the application, if you're required to submit documentation, payroll reports are a given. The basic idea with this documentation is that the bank wants to see that it was a valid expense and that the disbursement of funds was actually made. So for a payroll report, if you use an outside service like Paychecks or ADP or another one, the payroll report, along with a bank statement showing the ACH payment out or the shift of funds to the payroll provider, are sufficient, because you've got a third party involved and it's directly clear what funds were spent and that disbursement was made. There's been some discussion over if you run payroll in-house, you may be required to have a little bit more documentation because it doesn't have that third party element to it. So the bank may be requesting some additional information to support those internally prepared payroll reports. The second point there has been confusing to some extent. So let's say again that you extend your payroll for forgiveness through July 7th. Well, that pay date on July 7th is going to go on the third quarter, 9/41, which isn't going to be filed for a while. So does that mean I can't file for forgiveness before that? No. What they're saying is they want these tax filings that support what you're submitting that have been submitted up to this point. If there's questions later on, like on that July 7th one, obviously they can come back and request that 941, but you don't have to have it at the time of application. So that's an important distinction there. Now, for some of those other payroll costs around health insurance and retirement contributions, those they're going to be looking for invoices and canceled checks or payments on the bank statement, etc. Some of this as well has eased up a certain amount because it was really hard to match up in the 8-week period. Theoretically, these employer paid benefits should be the same ones as the same payroll periods. But we know, especially with retirement contributions, sometimes those happen at different times during the year. My advice here is be reasonable. Try and put it as much as possible within your period of forgivable expenses. But if you make retirement contributions periodically versus with every payroll, you don't want to leave that out completely if you need the funding to get to your 100% forgiveness. But you also want to be careful that you're not claiming retirement for way before COVID or prepaying retirement or some other thing. It goes back to that good faith idea. You want to make sure that you're being reasonable and following the intent of what was there. And again, I think a lot of the questions that we were getting earlier of how do I time this to get everything in become a little less critical if you just extend your period and cover it with 100% payroll costs and the things that are easy to document. Then you don't have as many issues and you don't have as many questions or things to put forward. Documentations to support the FTE. This is more critical, obviously, if you have to file the full form because there's additional computations, but with the easy, this is pretty straightforward. If you are going to do some of that other 40%, that's what these last 4 items are, is regarding the non-payroll costs that can be forgiven. And I'll go through them briefly, but again, like I said, you're going to lessen the load potentially if you focus primarily on payroll. So you can take mortgage interest, but it's got to be backed by the mortgage. So you have to submit the mortgage as well as an amortization schedule showing the interest. And the SBA guidance and the law was pretty clear, especially on mortgage interest. You cannot make prepayments. So the intent here was to cover you during this period, not to be funding something for the future. In terms of leases and utilities, they would be looking for actual receipts and canceled checks, again, or evidence on a bank statement of payment. If you claim any lease expenditures, you have to have copies of the lease agreements, and those mortgages and lease agreements had to be in effect as of February 15th, when this all started, kind of that line in the sand that we talked about earlier. So again, if you don't need to get in the weeds here, then you don't even have to worry about some of this. One of the questions I know did come up with leasing is it wasn't clear early on what kind of leases were covered. All personal and real property. So copier leases are covered. Other equipment leases are covered, as long as it was an agreement that was in place as of 2/15. There was also a question about what if I rent space and it was during my renewal period. If it was the renewal of a lease that existed at 2/15, again, I don't really see a problem. But these are some of those questions that you may not even have to spend the time and effort going through if you focus on maximizing out your payroll piece. On the other side then are some of the things that you need to retain as documentation. If you can't file the easy, and we're assuming tonight everyone's going to be under that 150 and it's going to pass, or you can do the form, so you're not even going to have to worry about Schedule A. If you get into the full form and Schedule A worksheet, it does require more documentation and supporting amounts. There are a number of tools available, so if that applies to you, feel free to reach out. I'm happy to help, send you in the right directions or answer some specific questions around that. As I said earlier, you don't have to submit, but it's really critical that you keep documentation around any of those FTE exceptions or safe harbors. Somebody asked me the other day, well, what about, orders where I can't return it as business to full employment? So I'm in Dane County, and Dane County right now has this mask required rule. If that was an impediment to restoring business and you copy down the order off of the internet, or you write the date that it was enacted and the name of it, that's sufficient. I mean, most people are going to know those things going forward, but if 5 years from now something gets audited, you may not remember. So just write it down. Write it down. Here's the rules that we took into consideration and what came into effect for us. And that goes with that third one as well, those standards of not being able to operate at full level. The last one has also been a huge piece of angst in the media as well as for individual borrowers, is there a necessity of the loan? In general, pretty much everything I've read, heard, and my personal belief is that the uncertainty around this particular circumstance makes it pretty much a necessity for any church or nonprofit I've seen. Where this came into more question with some of the for-profit organizations that had other options or other significant funding. So this is not one that I would sweat. Now, some of you may be aware too that when this was in the media, they came out and SBA said, we're not going to look at anybody's certification of good faith necessity need or necessity certification if you're less than 250 or less than 2 million. That's not 100% accurate if that was the way it was reported or the way it was heard. They're automatically looking at more than 2 million, but the SBA retains the right to come back and look at any borrower even below 2 million for necessity. Chances of it happening are slim, but again, it's within their prerogative to do if they choose to. This is the webinar that I talked about. If you know somebody who hasn't gotten funding and still wants to do funding, I think now they're going to have a much easier time than those of you who were the pioneers and early instigators in applications. You had much tougher waters than people do now, but pass the news along. At this point, as I said in the very beginning, there's still substantial funds sitting there. And there's a school of thought that says those funds are going to be used, whether through PPP or for something else. And one of the discussion points is, can we potentially open a second round of funding for the same people or people that already had funds? As of this point, that's not on the table or not in process that I'm aware of, but it has been one of the points of discussion. Here's a few resources from our website, and I will make sure that I get these slides out. I'll send them on so that you have them and you can use all of the links. And then my contact information is here as well. The other person on the contact slide here is my colleague Kate, who works on the tax side. I work more on our assurance side and with nonprofits specifically. And she does more work with our for-profit organizations, but she's also very versed and obviously an expert in all of this. So she's happy to answer questions as well. So that leaves us a little bit of time. I'm not to my full hour, but I intentionally wanted to make sure that we had some time to interact and answer any questions.
I'll throw out one more question that seems to come up from a couple of people is when you mention the 60% that's required versus the 100% to use for payroll. So I think what you're saying there, the legislation or the rules that are out there say that you have to use a minimum of 60% for payroll, meaning you can't use more than 40% of the total money that you get on other things like mortgage interest or copiers or any utilities. But you can use anywhere from 60% to 100% on payroll.
Correct.
Correct?
Correct.
And the other thing, we are going to, we will provide to all of you who would like it from the conference, we will provide you with copies of your benefit statement so that you can support those expenses. As soon as we find out whether you need to or not. I was trying to Google and I could not find anything quickly on my cell phone about that under $150,000 other than something from the Bankers Association asking for that to be something. But I didn't see anything that was coming from Congress on it yet.
That was my thought early on is we saw throughout this process, sometimes there was some communications with the bankers directly with the SBA and with legislation. And maybe part of that, because the same is true from my side, from the accounting side. I'm part of the national organization, the AICPA, and we've been doing a fair amount of work with the SBA on making sure things are there too. So it'd be great if that's going to go through, but my guess is it's at a bank level at the moment.
Okay.
It is not at a bank level. It is being being discussed by Congress at the present time.
Oh, it is.
I just went online.
Okay.
Yes, they're looking at it very strongly because there are so many loans under 150,000, 3.7 million under 150,000. It's going to be a nightmare to try and go through all those.
Okay. That would be great if this was all not something you had to do.
Well, they say there's a form you would have to submit.
Okay.
But just one form to the bank. And you wouldn't be held liable if you had any problems with it.
Okay. A few other questions that came in. When do you determine the beginning of the covered period? I know that there was some question about this at the beginning. I think that they came up with the idea that the covered period begins on the date that the loans were put into your account. Is that correct, Melanie?
Correct. And there were a few banks that put in like a small grant or a small piece in an initial disbursement and followed it up somewhere between 3 days to 5 days later with the full loan amount because there was misunderstanding again around that. The PPP was to be dispersed all in one lump sum, but if you happen to have a bank that did that advance, your date still starts on that date of advance.
Okay. There was one question about how does the church want you to record this? So that's an interesting question. Basically, for those of you who are operating on an accrual basis, meaning you use a balance sheet, we would say put it in a liability until the time that it is forgiven. And so you would when you got the money, you deposit it into cash and you recognize a liability, like a loan payable, just like you would a mortgage. Go ahead and record your expenses just like you normally would. And then when we find out that your loan is forgiven, it would become grant income or kind of a donation income. I did not get an answer yet from GCFA on how they're going to want us to put it. I'm assuming that we're going to have a line on the statistical report so that we can see how many people got those PPP loans. It will not go into consideration on your apportionment calculation.
Yeah, and as we were talking, I went back to this slide with the discussion that came up tonight. It's really interesting to me because I've done probably 20 webinars during COVID period. And I think probably 80% of those, there has been news that's come out or somebody's brought up something during the webinar that wasn't there or I didn't know at the start of the webinar. So I appreciate that current information tonight. And you can see from the statistics, this is straight from the SBA website. It would make sense because the average size of those loans and the volume of the loan, there's almost 5 million loans at this point. It's going to definitely lighten the administrative load and the burden around closing those out.
Wonderful. Someone asked about an office employee that normally reduces their hours for the summer and hope that that doesn't interfere with their with the use of using the easy form. Probably that one employee may not trigger the 25% reduction overall.
It shouldn't, and even there, I would probably consider it part of an exception that's not specifically spelled out. In the full instructions, there are different periods for calculating your baseline FTE. Sometimes all of 2019 is used for a lot of things, but for seasonal, like somebody like this, or like if you have summer workers or so forth, you can use seasonal periods to define it. And I would just document again that that was a seasonal person and that you have evidence that it was normal procedures of what's been done in the past, that it wasn't something COVID related.
Okay, anybody else have any questions? I've hit everything that came through the chat screen. Okay, then I just want to end with saying thank you to everybody who was on the call tonight on the training. If you do have other thoughts for training that you would like to send to me, you can send them to S. Snyder, so SSNEIDER at wisconsinumc.org. As I said, I think some of the thoughts that we're going to do are the statistical reporting, how we calculate apportionments, how to fill out the church council or the church charge conference forms that will be coming out to you in August, and then also internal controls. We had one other question from somebody here on examples of eligible expenses in addition to payroll, mortgage interest, copier, rental cost, I think, utility expenses. Those are some of the big ones.
And we talked yesterday in preparation for this, housing allowance is an includable payroll expense. But if you have a parsonage, we might be able to make an argument. But again, it's probably better time spent going after forgiveness with the things that are the easy to document and don't have the questions and don't have to spend time doing the supporting around them. So I would recommend utilizing the extra time given to make it easy on yourself if the 150 forgiveness doesn't happen.
I did forget some questions that came in this afternoon.
Sure.
Reimbursements for education, professional mileage. We were told that those were part of benefits. I'm not sure that those are.
No, those are reimbursement costs. Unless you're giving mileage or like a cell phone reimbursement where it's not an accountable plan, something you put on the W-2, those would not be eligible.
Okay. And then the other one, what taxes would be eligible? Is the employer portion of FICA?
No, FICA and any federal taxes for the employer are not, only state and local. So for the most part, that's only going to be state unemployment. In this part of the country, we don't have a lot of local taxes or other additional. Some of the bigger metropolitan areas like New York has a number of local taxes on payroll as well. So those are eligible. For most of you, it's going to be unemployment, state unemployment only.
Okay. Jackie, thanks for typing that in. And I'll just ask, was your question on page 4 of the instructions, was that the long form? So one question was just on the short form, Melody, about how much detail do they have to provide on people on the short form?
You don't. You're not submitting a schedule on that. Like it said, you have to give information on the total FTEs, or you certify. I don't even think you give, because it's a head count that you give at the top. You're just making the certification that you have met the exceptions or the standards for filing the easy form.
Okay.
Okay, can I go back to the question on the reimbursements for education? So we were originally told by the bank that the ministers' costs for education and professional were part of the benefits. Are you saying that's not true now?
Does it go on their W-2?
I'd have to ask him that. I don't know. That's a question I have to ask. If it doesn't go on.
Yeah, it depends on whether it's an accountable plan or not, and whether or not it goes on the W-2. If it's something that would normally go on the W-2, yes, you can include it.
If it would normally go on the W-2, I can't include it. Okay, all right, I'll have to ask him that. Okay, thank you.
Mm-hmm.
I think that was it then. We are recording this and we will put it on our website. I will ask Melody if I can get the slides here so that we can put those up as well. And thank you for your positive comment on this presentation. Thank you, Melody, for doing this. And I'll let you know when the next training is. Okay.
Everybody.
Good night, everybody.
Thank you.
Have a good night.
Thank you.